Traders, in this video, we are going to learn about the OTM Delta Swing Indicator. Here we have the image, where we see some Japanese candlesticks, along with some waves. We see trending moves and retracements in both directions. As the price advances, these waves are formed. These waves are called swings, and they shape trending moves and retracements. You may wonder, what can I do with these waves? In reality, there's not much we can do with just these waves. That's why we add data on top of them. Let's look at it on a chart. This is the same chart where we have the same waves, and we will get information or data that summarizes the candlesticks forming that wave. In this case, we have two main data points, volume and delta. The volume is 1266 and the delta is 110. The value of 1266 is the sum of the candlesticks forming that wave, and the same goes for delta. Now, if you are new to the delta topic, my recommendation is the following. If you're still not clear about what delta is, I recommend you attend the free masterclass titled 3 Concepts to Become a Profitable Trader. In that class, I explain these delta concepts so you can understand them much better. How can you access it? Below, you'll find a button or a link specifying the masterclass, and you just need to click it to access the class. I recommend checking it out so that you have better context for what we're discussing. Returning to the waves, we have a retracement, right? We've already looked at the data provided by the upward movement, and the retracement also offers some data at the bottom. It also has something called informational signals. Remember that the white value is the volume, and the lower value is the delta. Now, we'll see these informational signals later and understand when they appear and why they are generated. Essentially, these signals detect market anomalies, which we can use to gain an advantage in the market. How do we interpret the OTM swings informational signals from this indicator? Let's see. These are the signals or symbols from this indicator. We're going to learn about each one of them. It's really not complex, so don't worry. I'm going to explain it here. Informational signals appear when the OTM algorithms detect market anomalies. OTM swing detects 3 types of anomalies. The first one is called exhaustion, and we will get these 2 signals. In an uptrend, we will see them in this green color. We can configure it to whatever color we like, and in a downtrend, we will see it like this. This triangle pointing up is for an uptrend, and the one pointing down is for a downtrend. In the market, we can have 2 types of exhaustion, by delta and by volume. Let's first look at volume exhaustion. It's essentially a wave in an uptrend. Let's look at an uptrend example first, and then we'll see a downtrend example. When we have a consecutive decrease in retracements, for example, with a volume of 1,900 and 500, an informational signal appears, detecting this volume exhaustion in the uptrend. This is why we will see a signal like this, a green triangle pointing up. Now, if we have the same movement but not in a trend, meaning we don't have consecutive higher highs and consecutive lower lows, for example, with a retracement of 1,000, one of 900, and one of 500, in that case, the same triangle will appear, but it will not be solid. Instead, it will just be the outline of that triangle. This indicates that we are not in a trend. That's why we have no trend here. Now let's see the delta exhaustion, which uses the same symbol. When does this phenomenon or anomaly occur? When we have a consecutive decrease in delta, for example, with retracements of -40, -30, and -20. The delta for selling is consecutively exhausted. This means that we have a signal indicating a potential buying opportunity. Why? Because the sales delta is consecutively decreasing. It can also happen that both volume and delta decrease consecutively, as in this case, where we have -40, -30, and -20 in delta, and 1,900 and 500 in volume. Thus, we will get the same signal. Remember that if it's in a trend, we see this solid symbol. The same thing happens when there is delta exhaustion, but if it's not in a trend, we will see the same symbol, just with the outline pointing up. It's easy. right? Minus 40, minus 30, minus 20, meaning it's not in a trend, and we'll see this signal. Now let's move on to the second signal, effort with no result, which uses this symbol for an uptrend. We'll look at the downtrend examples later. When does this occur? Let's define the concept of effort result. The effort result occurs when the volume makes the price move proportionally to it. Let's look at this example where we have a larger candle with higher volume, and a good candle range, meaning high volume, and the price responds with movement. Now, what happens if the opposite occurs? This is called effort with no result. Let's see. Effort with no result occurs when the movement is not proportional to the volume. For example, we have this candle with an initial volume, then another proportional candle, and then a large volume. But we see that this candle has little movement. This would be the definition of effort with no result, meaning significant volume, but the price does not respond with movement. Now, doing it candle by candle can be a bit difficult. So, what OTM swing does is detect this anomaly by waves, making the reading easier. We will now see some examples. This phenomenon also occurs in uptrends and downtrends, just like the first signal we saw. In an uptrend, it has this upward form, and for a downtrend, it has a downward form. Let's look at an example of effort with no result. We have this trending move, the retracement with a resulting volume of 1,000. Then we have the next wave with a volume of 900, and the third retracement with a volume of 5,000. If we look at this movement proportionally to the volume, we see what would be effort with no result. Almost all the waves have the same amplitude, the same amount of movement, but in this case, the movement is almost the same, while the volume is much larger. This is what we call effort with no result. Hence, an informational signal appears here. Why is it solid? Remember, it's because it's in a trend. So, if we see the same volume pattern in the waves but not in a trend, how will it appear in an uptrend? In cases where the signals appear at the bottom, because we're looking at retracements in an uptrend, in a non-trend scenario, only the outline of the symbol or signal will appear. Now, let's move on to the third signal, called delta divergence. We have a trending move with its respective retracement with negative delta, which is normal for the retracement. However, we have this wave with a retracement, where the resulting delta is positive. In this case, we would have what's called a divergence. A divergence is basically when two data points don't align with the normal or expected outcome. That's why when such data appears, we will see a dashed box in the color favoring the divergence. In this case, it's green, indicating a divergence in favor of buying. We can see here that we also have the same data, and a weakness signal would appear. At this point, you may be wondering, can we have three informational signals in one wave? Let's see. We have three anomalies in this retracement, which would be a great buying opportunity because we're getting multiple anomalies. We have the same example with a wave of little movement but a lot of volume, which would be effort with no result. Here it is. We also have volume and delta weakness and a delta divergence box. Thus, these types of opportunities give us greater confidence and therefore a higher probability in the market. Let's recap the previously mentioned signals so we don't forget. This solid triangle means exhaustion in a trend. The non-solid one means no trend. Effort result is this one, in this case for an uptrend, effort or no result in a trend. This means effort with no result without a trend, and this means delta divergence, or what we also call a delta divergence box. You might wonder, what about these signals for downtrends that point downward, except for this one because it's a square? Let's look at the examples. The principles are the same, but they apply to downtrends. Let's look at some examples. Volume exhaustion. In the retracements of a downtrend, if there's a decrease in volume, such as 1900 and 500, it's in a trend, so we have the solid signal, and if not, we get the outlined shape. Okay, now for delta. Delta of 40, 30, 20 consecutively decreases, and we'll also get an exhaustion signal. If it's not in a trend, we will still get the same symbol, but without the solid color. Now let's look at the effort with no result signals in downtrends. Here we have a wave of very short length with a large volume of 5,000. So, we have effort with no result in a trend because we have a trending move. And when it's not in a trend, we basically get the same symbol, but only the outline. Let's see. Delta divergence in downtrends, represented by a square with a red dashed line. It's intuitive. For downtrends, it's red, and for uptrends, it's green. In this case, we have a downtrend, retracement, with a normal delta of a trending upward move, 40, 30, but here we have an anomaly, a negative delta in an upward move, so it gives us a delta divergence signal. In this case, we also get a weakness signal in a trend. Okay, delta divergence doesn't distinguish between trends or not, unlike the other two signals of weakness and effort with no result. But in this case, we see a decrease in volume, and we also see a decrease in delta, going from 40, 30, and then to negative 20. Now let's look at an example where we have all three anomalies in one move. This is an upward retracement with a negative delta divergence anomaly. Here's the box, and we have effort with no result because the volume is very high for the movement generated by these candlesticks forming this wave. And we also have weakness, in this case delta weakness, because we have a delta of 265, then negative 25, and it keeps getting smaller, in this case negative 105. Thus, we get three signals indicating three anomalies. This is an excellent opportunity for us to take sell positions because we have several confirmations, allowing us to do so directly, objectively, and knowing when we have more advantages in the market. Great! Now you understand where OTM swings informational signals come from. Do you want to learn how to use this indicator and all the others within a trading strategy? Let me tell you, we've already done the homework for you. You don't need to reinvent the wheel and figure out how to organize them, because we've already done that. We've created a step-by-step guide so that you can make objective, structured, and organized decisions in your trading. With this step-by-step approach, you will learn how to become a consistently profitable trader and have a detailed methodology to achieve positive and consistent long-term results. All you have to do is click the button or link below if you haven't already seen the masterclass. That way, you can see how these indicators are grouped within a strategy and methodology.